Good morning and welcome to Credit Wellness, brought to you by US Bank. My name is Corey. I'm going to be your presentation host today. Today we're going to talk about credit wellness, what that means, why credit is so important. I'm really excited to be here giving this presentation. I've been with US Bank for almost 9 years. I'm a branch manager here in the Seattle area, and I'm really passionate about financial wellness and financial education. So we'll jump right in and talk a little bit about what we mean when we say credit wellness, right? Why credit wellness is so important. So just like wellness in any other part of our life, it's important that we have credit wellness. You need to know where you are. You need to know how to take steps to get to where you want to be with your credit. Credit can be a really complex and confusing topic. So hopefully today we'll be able to debunk some of that and help you feel a little bit more comfortable with it. Wellness is a journey, right? We want to get you to a place where you're feeling confident and feeling strong with your credit. We want you to be knowledgeable about how it works. We want you to be able to understand your own unique individual situation. We want you to feel like you can manage your debt, feel like you're in control of it, and that you're in control of your financial future. So why is credit so important? Credit can have a really big impact on your ability to make future financial purchases, large purchases like homes, things like that. Credit can also affect the type of interest rate you get when you're going to make those purchases. When you're asking a lender to lend you money, credit can have an impact on the type of interest rate you get. Having good credit can help free up, other money in life that you can use for investing or, putting back into your life and into your future. And then it can have other impacts on things like renting, employment, even relationships. Landlords will pull credit. Some employers pull credit now. And then even in relationships, having a good understanding of where you are financially and with your credit can be really impactful, as your credit can impact the overall relationship. So 5 essentials for credit wellness, and we'll go into these a little bit as we go through the presentation today. But just starting out, these are kind of our 5 essentials, our 5 key areas that we want to focus on for credit wellness. We want to know where we're at currently right now. We want to check our credit score regularly. Things change, right? We want to make sure we're staying on top of where our credit's at, and if things are changing, that we understand why. We want to build credit by using it responsibly. So we want to make sure we have credit products that we're using in a way that is strategic, that's going to help us get to our goal. And then we want to stay on top of our payments. That's a big one. Make sure we're making payments on time. And then if you do have debt, we want to focus on chipping away at that and getting that as low as we can, getting that paid down. So know your starting point. This is really important. What is a credit report? So there are 3 credit bureaus or 3 credit companies, you'll hear, TransUnion, Equifax, and Experian, and they maintain credit reports that provide information to creditors, people that issue credit to you, like lenders, your bank, things like that, and others that are allowed to access that information. You can get free credit reports once a year, your full credit report once a year. There's a website on here, annualcreditreport.com, and you can get your free full credit bureau printout once a year. There's also a lot of other resources for tracking like daily, weekly, monthly credit activity, right? We've all heard of resources or sites like Credit Karma. Here at US Bank, we offer a free credit score service where you're able to view your credit score in real time. So there's some really great ways that you can stay on top of it without needing to work too hard, right? Or without having to pay anything. With the annual credit report, what can be so great with that is it gives you the entire year, and it really goes deep. It really goes deep into things. And so you can look, you can check the details, you can make sure things that that should be on there are on there, and things that shouldn't be on there are not on there. So annualcreditreport.com, once a year you can get that. So what's a credit score? So your credit score is different from your credit report, right? That credit report is that really detailed one that you can get once a year. Your credit score is different. It's just a number. And basically what that number does is it tells lenders how responsible you are with paying back or using debt that has been lent to you in the past. So kind of think of it as like your credit or your report card from school, right? So basically what your credit report is going to have is it's going to give you a number, that's your grade, and lenders are going to look at that, and that grade or that number is determined by several different factors. So the factors here on the screen, these are going to be like our main ingredients, right? The things that are the most important. So payment history, outstanding debt, utilization, credit type and history, and recent inquiries. So I'll go through those. So payment history is really, really important. You need to be making payments on time. Even if 1 month it's just the minimum payment, it's really essential that payments are made on time, because that shows lenders that you go to in the future that you're going to ask for money from, that they can trust you to pay back your debt. Outstanding debt would be debt that you have out there. Maybe it's student loans, maybe it's a personal loan, maybe it's a mortgage, maybe it's credit card debt, and how much of it, right? Utilization, that's talking specifically about how much of your credit that has been lent to you that you are currently using. So if you have 3 credit cards and they each have a $5,000 limit and they're all maxed out, you're at 100% utilization, right? So utilization is really important. They talk about, you'll hear a lot of people talk about kind of a sweet spot of like 30 to 40% utilization is a good number to be at. There's no hard and fast rule with it. There's no specific utilization that you want to shoot for. But the idea being is that if we can avoid it, we don't want to have credit cards that are maxed out for long periods of time. We want to have small regular usage on our credit cards where we're using some of it to show that we're responsible with utilization and paying back. But we don't want to have really high utilization for long periods of time. Credit type and history. So this is important when you are looking for, if you're looking at larger purchases like a home, things like that, having diverse types of credit products on your credit, on your credit report can be helpful. Not necessarily a requirement, but it can be helpful. So, thinking about personal loans or credit cards or auto loans, they're all a little bit different. They're all going to be used a little bit differently. You're going to pay them back differently. And so that's where different types of credit and the history of it come into play. They also will look at the history as in like the length of credit, how long you've had it. So to calculate that, they're going to take your oldest credit product, so maybe the very first one you got when you graduated high school to build some credit, and the newest one you've gotten, maybe a recent one you got for a trip that you were going to go on. And they're going to take the average time based on the two of those, and that's going to be your credit history. And then they're going to look at recent inquiries. So recent inquiries would be products that you've applied for, credit products. So have you had a lot of recent inquiries? Have you had very few recent inquiries? They're going to take a look at that and see. Sometimes the thought is that if there's a lot of recent inquiries, that maybe there's some sort of financial situation going on where you're trying to obtain credit to pay for it. And that can be potentially like a red flag to lenders if you're going to apply for something. So all of those are kind of those main factors that are going to dictate your credit score. So facts versus myths. What does and doesn't affect your credit score? So the things that do affect your credit score, late payments. It's a big one. Don't make late payments. As much as you can avoid it, don't make late payments. Getting close to your credit limit. That's that utilization that we talked about. So like I said, they don't want to see credit cards maxed out for long periods of time. Credit can be pretty fluid, which is really nice. If you did have credit cards maxed out, if you then pay those down, that credit score can take a pretty big jump pretty quickly. So that can be really nice. Know that it's not, it's not something that you can't fix, right? Closing your old accounts, that does affect your credit. That changes that credit history talked about, right? They take that oldest and that newest and they average the time out. So if your oldest credit, that oldest credit card, maybe it was a starter card, maybe it was like a college visa, something like that. If you can keep that one open, that can be helpful for that length of credit history. Any type of bill going into collections, that can affect your credit score. Child support orders can affect credit score. So if child support's like not being paid, things like that. And then credit applications. So that's those inquiries we talked about. You'll hear them called hard pulls. It's when a lender actually pulls your credit information into an application for you. So doing a lot of that can have a negative impact on your credit score. Things that do not affect your credit score. So checking your own credit, right? Using those services like Credit Karma, or here at US Bank, we offer a free credit monitoring, a free credit score feature in our online and mobile banking. And that does not affect your credit score. Those are what we would refer to as like a soft pull. Debit cards don't affect your credit score positively or negatively. Cash transactions do not. Overdrafts, if you overdraft your checking account, that's not going to affect your credit score. Non-bank loans are typically not going to affect your credit score unless they go to collections. And then parking tickets are not going to affect your credit score. So checking your credit score regularly, we've talked a little bit about this throughout, but why it's important. You want to be able to know that everything that's on there should be on there and things that shouldn't be on there are not, right? You want to look for unusual activity. If there's accounts you don't recognize, maybe a credit card that you don't recognize on there, because there are ways to get things like that removed. And so it's important that we get ahead of that and get started on getting things that shouldn't be on there early. You can catch mistakes. You can see, kind of how your behavior is affecting your credit, and if you need to make changes or adjustments throughout in that wellness journey. So like I've mentioned, US Bank does have free credit monitoring, which is great. We offer it through TransUnion, which is one of those 3 credit bureaus or those free credit, those companies we talked about earlier. And we give the score. We also have a really cool feature. It's a credit simulator. So if you're really trying to get down to the nitty gritty and see how things will affect your credit, you can use this simulator to add in different scenarios, situations, maybe a hard pull here, maybe you want to apply for a mortgage someday, so you can put in how different things will affect your credit and kind of come out with a credit score at the end. So this is a really cool tool. And then build your credit by using it responsibly. So really all it comes down to is we really want to use our credit responsibly. We want to know what's going on with it. We want to make our payments on time. And there's some ways that you can start, right? You can start small, start with just a small, simple credit card. They offer, most banks and lots of companies offer secured credit cards where you take your own money and you back that credit card with it. And that's a great way to start. If you have credit that is not great, that needs to be repaired, a secured card is a fantastic way to go. You want to use your cards. So you don't want to get credit cards and just leave them there. That doesn't actually show a pattern of behavior that lenders are looking for. What a lender wants to see when you go to buy a house someday or a car, they want to see that you have used it and paid it back. If you never use it, you can't pay it back, which means it doesn't create that pattern of behavior that they want to see. Pay your entire balance each month if you can. So with credit cards specifically, every month you'll get a statement balance. That is what's owed for that billing cycle. If you can, you really want to aim to pay that, because if you pay that, you won't pay interest on your purchases. At the end of the day though, if all you can do is that minimum payment 1 month, make that payment. We just don't want to have late payments. But as much as you can, pay that balance, that statement balance every month, so that you aren't, in that situation where you're getting hit with interest charges. Pay on time, we've talked a lot about that, and avoid collections at all costs. You really want to try and keep things out of collections. If that's something that you think is going to happen, talking to your bank, reaching out to see if there's options or advice that they might be able to provide can be really helpful. All right, so to recap today for our credit wellness, we talked a lot about, what credit is. It's that score that communicates to lenders, how responsible you've been with past credit that's been given to you. We talked about the 3 different credit agencies briefly, TransUnion, Equifax, and Experian. We talked a little bit about what goes into making a good credit score, those ingredients, on-time payments, utilization, all of that. We talked about staying on top of your credit and knowing what's going on with it and how important that is. So remember, there are options if you're trying to rebuild credit. There are secured cards, secured loans, different secured products. So there are a lot of really great ways that you can start building or rebuilding credit if you're needing to do that. Thank you so much for joining us for our credit wellness presentation.